Alrighty, everyone. So, welcome to my first installment of my weekly watch list playlist. I am rebooting my YouTube channel to start the year, and I want to kick this year off with giving my thoughts on SPX, the S&P 500 index, as we head into the new year. Just as a quick side note, I think, in my personal view, from what I have seen around the trading community, amongst FinTwit and other places, is that there's definitely a feeling of euphoria going on in the markets right now. A couple years ago, there was a lot of talk about a Santa rally. That didn't happen as the Fed began their hiking cycle. This year, we did get our Santa rally, and now people are looking at explosive targets to the upside, such as 5,000 and 5,200. And the market is literally in the same place as it was 2 years ago. Essentially, there's been no change. Okay, I think the S&P 500 is maybe down 1% or 2 from its all-time high from where it was 2 years ago. So there's been um, a lot of change, obviously, since then, and the markets have undergone quite a incredible battle back to all-time highs. But as we look at this euphoric moment heading into 2024, my vibe, my personal lean is I have the same feeling as I do or as I did in January of 2022. Okay. Obviously, post March, April of 2020, all the way through 2021 was a raging bull market for equities. Okay. The bear market began January of 2022. We saw like a sell off from 4,800 to 3,500 in SPX, and now we're back at 4,800 again. So if you look on my chart right now in front of us, I'm looking at SPX daily. I'm going to start zooming in. I've got a lot of stuff on my chart, and I want to walk everyone through it so I can share with you my bias and my approach to SPX and the equities market in general through quarter one. So this is a quarter one, and I would say first half of the year analysis of SPX in my view only. Okay, so for the next few weeks, as we finish up the January OPEX cycle, my bias is bearish equities. Okay, that is my approach from a swing trading point of view, and I'm going to break that down in a minute. But real quick, because this video is a little bit more geared towards swing traders, from a day trading perspective, if my bias for SPX on the daily, weekly time frames is bearish, and I'm expecting a longer term rollover through the next few weeks into the next couple months. My approach as a day trader, and I do day trade ES for those of you who don't know, is going to be shorting rallies. Okay, so for all my members in my Discord server, last couple weeks I said my approach is going to be buying intraday dips to position long, and that has worked out really well as we've seen a long consecutive series of higher lows being put in place throughout the cash session. My bias is now flipping to positioning myself short on rallies. I'm going to be utilizing the intraday short golden pocket, among other things, as I want to start selling rallies. And we're probably going to see that trend shift start this week, to be quite honest. So if we're looking at SPX on the daily, right off the bat, a couple things that I see. We have an ascending wedge right below all-time highs. We have a clear daily bear divergence with the RSI. Okay, so we can see price making higher highs. We see RSI making a lower high. All right, so that's where we get our bearish divergence. Combine that bearish divergence with what price action is showing us, and you get a bearish confluence, which is a high probability setup. Now, SPX remains inside this wedge. I'm going to zoom in a little bit so you can get a better view of it. I'm not going to change the time frames because I don't want to make this chart look any more messier than what it is. But price remains inside this ascending wedge as of Friday's close. Okay, you can draw it on your own chart so that way you can use it as a reference point if you want to pause this video. But for now, price remains inside that wedge. So my approach, or my personal lean, is we're going to see SPX enter an ABC corrective wave pattern. So going back to 2022, SPX has undergone a long bullish wave count, or what's the name called? Elliott impulse wave count, excuse me. Got my words mixed up there. And we have completed all 5 waves. Okay, so typically what comes next is the ABC corrective wave pattern. And I have that charted on my chart right now. Okay, A breakdown from this ascending wedge, and all technicals are pointing towards a rollover beginning this week, probably early on this week. Honestly, wouldn't be surprised if it's begun by Wednesday. Okay, we're going to see wave A of this corrective wave pattern begin. My target for wave A, and I think equities can meet this by the end of January OPEX, which is the 19th. My target for wave A is price reverting back to this blue box right here. So a few weeks ago, or actually about 2 months ago almost, or no, excuse me, it was a month ago. SPX underwent about 2 weeks of very tight consolidation, and this price broke out of this range. I think it was for about 11 days, but I might be wrong there. Price broke out of this range leading into December FOMC, and then you see this big rally or this big green candle right here. That was actually FOMC day, the 13th of December. Okay, so that's where we got that big move higher, and that was kind of, I don't want to call it a blow off top, but that was definitely where you see that huge increase in volume following the breakout of the range. Okay, so price does not consolidate in this tight range here around the 45, I would say 45.70 level. I'll use that as a reference point. Price SPX doesn't consolidate around the 45.70 level for no reason. Okay, there was clearly a lot of buyers that were sitting in this area, accumulating their positions. Every dip was bought, and eventually we had that blast off rally through FOMC. Okay, wave A, I expect to meet the 45.70 level, and I think around that area is where SPX will find a shorter term bottom, and that's where wave A will end. I think this move can be either completed or nearly completed into January OPEX, so the January 19th. Okay, if we look at the volume profile, we're going to want to see buyers defend the value area high, or VAH, of 2023's profile. Again, that sits right below the 45.70 level that I mentioned. Okay, if we're using fib levels, and I haven't gone over this yet, SPX would then complete a shallow retracement to the 38.2% fib level. Okay, typically wave A's, depending on how big wave 4 is in the impulse wave count, wave A will then either be determined as a shallow or deep retracement. In this case, wave A is probably going to be a shallow retracement. Okay, and I think we're going to see old resistance, as we see right here, turn into new support. Okay, it did act as resistance somewhat for a few days, but then with every poke above and then the consolidation at the highs, it turned into accumulation pretty quickly, and then we obviously see the rally. So I'm thinking buyers will defend the value area high and the 45.70 level again. That will then mark the end of wave A, and we should see a move higher again. And this move higher will probably coincide really nicely with February and possibly into March OPEX. Obviously, the market isn't going to move in straight lines like I have on my chart. There's going to be periods where the market's going to be trading sideways for a few days or so. Okay, there's going to be days where the market goes down 2 days and then rallies back up 2 days. Okay, and there will be no change in direction for a whole week or something like that. Okay, so keep in mind, I have my forecast drawn on my chart. The market isn't going to move in a straight line like what I have on my chart. Okay, it's going to be quite messy, as we can see SPX has been over the past year or so. Okay, however, I believe that wave B of this corrective wave pattern should be shorted, and here's why. You're going to want to draw, assuming we've already seen the swing high. Okay, if we see a new swing high this week, you have to wait for a price to officially roll over. But right now, it looks like we could have already seen a swing high be put in place between the ascending wedge. We have some bearish price action. We have a little bit of selling volume increasing, along with buying volume greatly decreasing the last week and a half or so, which is something to really keep an eye on as we are below all-time highs. Okay, I'm going to draw the short golden pocket from this 2023 high to the end of wave A. Whenever that comes, that's when I'm going to draw the short golden pocket. Wave B, and I did this just for this video and for my analysis here. Obviously, we want to wait for price to confirm the swing low and then the swing highs, of course. Wave B should rally, or should see SPX rally into the short golden pocket, which is going to look something like this right here. Okay, this rally into the short golden pocket is going to be shorted. I'm not pretty confident. I'm very confident in that we're going to see this rally be shorted and sold off. When that wave B ends, that is when wave C is going to begin, and that's going to see the wave A low be taken out, and we're going to see new lows on the year in SPX, and that's going to be wave C selling off. Okay, so price is going to go searching for value. There's quite a few high volume nodes in 2023's profile, but there's really no large value area until you get down here below 4,200 basically. So right around 4190, and then even lower around 4100. Okay, price is going to go searching for value. We may see buyers put in a swing low right around here, and this could mark the end of wave C right here around 4370. Okay, that would be the long GP using these major swing pivots from the beginning of wave 5 right here at 4103 all the way up to the ending of wave 5 up here at 4793, which I have marked on my chart right here. Okay, honestly, it remains to be seen, obviously, but I have a feeling wave C can be pretty drastic and it can get pretty ugly. Okay, price is going to go searching for value. This is the only area that I see that maybe this value area is big enough for buyers to put in a long-term swing low again, and then we can see some really long consolidation around this 4,400, 4360 area. Maybe. Obviously, price remains to be seen. I would not rule out, though, a big puke lower below 4,200 at some point in the first half of 2024. Okay, that is my initial lean right now. I personally will be looking to long this golden pocket when it comes this year, and it should come in the first half of 2024. Probably it would really, really nicely coincide with the Fed announcing rate cuts. That could be the big puke lower, as the markets will be in sell the news right now. Okay, I mean, this was by the rumor right here of Fed cutting rates. When Powell did the complete 180 dovish flip during December FOMC, the dot plot shows up to 5 rate cuts or whatever it was coming in 2024. Okay, this is by the rumor. When that comes, whether it's in March or May or June, whenever that comes, it's going to be sell the news on that event, and that is my approach to it. That could lead SPX into a big puke lower sometime in the first half of the year, probably during quarter 2. And that's when I think we'll see a return to 4,200 again. Okay, that is a dip that I want to buy at 4,200. This very large value area right here, price is going to be searching for value. There's going to be no value created in 2024's profile. Okay, now the risk here for bears, obviously I have a bearish bias right here. Price action does not support a long or a breakout right now. Okay, and if it does, it's a very unhealthy breakout and it has a very high probability of failing. Okay, and obviously my bearish analysis right here will be null and void if there is a breakout through 4,800 in the next couple weeks or so. Okay, but that is not my base case right now. That is not the high probability path that I see SPX and equities taking as a whole right now. Okay, my base case for the first half of 2024 is this ABC corrective wave playing out, and I think we end up at 4,200 by, I would say, the end of June. I think around June FOMC, we see a return of 4,200 SPX again, potentially lower. Price is going to be searching for value, and this is a very large value area right here. This would be a great place to buy back into long positions. Obviously everyone wants to buy SPY for the long term. You buy SPY and never sell, stuff like that. If you didn't buy down here the first time, you better be a buyer again the second time, because this would be a really great place to buy back in for long positions. Okay, so I hope this video made sense to you guys. If you have any questions about anything I talked about in this video, feel free to leave them in the comments below. I'll be more than happy to explain further. Some short positions that I am eyeing this week to enter include January 19th, 475 and 470 strike puts on SPY. And these are all SPY positions, by the way, not SPX, okay? 216, 465, and 460 strike puts, and 315 or March 15th, 450 and 440 strike puts, okay? Those are pretty far out of the money, especially the 440s. That would require an event, maybe like the Fed cutting rates in March. Okay, there's some debate. I think the last I looked, it's like a 50-50 chance the Fed does a sizable rate cut in March FOMC. It's either March, they might do a small one. That's my best guess, maybe like 25 BPS, something like that. January, there's not going to be any cuts in January, especially with SPX rallying to 4,800 after December FOMC. There's zero reason for Powell and the Fed to cut in January. I can tell you that right now. There's zero reason the Fed's not cutting in January unless something big and drastic changes, such as a black swan event. Obviously, a very low probability of that happening. Okay, so I personally like January and February slightly out of the month or slightly out of the money monthly strike puts. So the 475, 470s for January that I mentioned, and the February 465 and 460 strike puts. Those are the short positions I'm looking to add this week. A stop loss is probably going to be a weekly candle closing above 4,800 with an increase in volume from the last 2 weeks. Okay, that would show that maybe price wants to break out to the upside, and we're going to explore higher prices, essentially go in exploratory mode at all-time highs, and there's no point in fighting against that breakout. It would be better to wait for that false breakout to be confirmed or to wait for a larger move higher and then a retest of 4,800 to pivot long again. Okay, but this is my base case for the first half of 2024. There's no point in trying to chart the end of 2024, okay? A lot of people can't even make money in 4 or 5 sessions in a row. They can't stick to the rules. So what the hell is the point for trying to forecast SPX at the end of 2024? But through the first 6 months, through January OPEX, through February OPEX, and through the first 6 months of 2024, my base case and my path or my plan, my approach to SPX and equities as a whole is going to be shorting rallies, and I'm looking for this ABC corrective wave pattern to play out. So as I said a few minutes ago, if you have any questions about anything that I talked about in this video, feel free to leave them in the comments below. And if you did enjoy my analysis, please feel free to like and comment down below. That would help with the YouTube algorithm a lot as I try and get this channel up and running for the new year. And feel free to subscribe to my new channel. Thank you and take care and Happy New Year.